Picture this. You have a house with $500,000 and $500,000 sitting in your bank account. Is your house paid off? The answer might surprise you, and it could save you millions over your lifetime. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. I've been helping families make smarter financial decisions since 1983, and today we're going to challenge one of the biggest financial myths in America, that paying off your mortgage as fast as possible is the smart move. Let me walk you through something. Imagine your house is worth $500,000 with a $500,000 mortgage. Now, you also have $500,000 in your bank account. Here's the question. Is your house paid off? The answer, yes, because you could move that money from your bank account to pay off the mortgage at any time. You have $1 million in assets working for you right now, but here's what most people miss. The moment you move that $500,000 from your liquid account into your house, you still have a $500,000 house, but now you only have $500,000 in total assets instead of $1 million. The rate of return on equity in your home is always zero. Your house will go up or down in value regardless of how much you owe on it. So any equity sitting in that house is losing money to inflation and opportunity cost every single day. Here's where it gets interesting. Banks love to push 15-year mortgages. They tell you you'll save on interest, pay it off faster, be debt-free sooner. Sounds great, right? But let's look at the real example. Take a $500,000 loan at 6%. On a 15-year mortgage, your payment is about $42.19 per month. On a 30-year mortgage, at the same rate, it's $29.98 per month. The difference, $1,221 per month. Now, what if you took that 30-year mortgage and put that $1,221 difference into a side account earning 6%? At the end of 30 years, both scenarios would leave you in exactly the same financial position. But here's the critical part, and this is what really matters. What happens if you lose your job in year 10? If you've been making that $4,200 a month payment on a 15-year mortgage, you've never missed a payment, you've done everything right, the bank will still foreclose on your house if you can't make the payment. They don't care about your perfect payment history. But if you've been making the $29.98 payment and banking the difference after 10 years, you'd have nearly $198,000 in your side account. That's enough to make your house payment for years while you get back on your feet. You keep your house, you keep control. So let me give you another scenario. You and your neighbor both have houses worth $1 million. You've been paying yours off aggressively. You only owe $100,000. Your neighbor has been doing the opposite. They've kept a large mortgage and built up liquid savings. You both get in an accident and can't work. Whose house gets foreclosed first? Yours, because the bank only needs to sell it for $100,000 to get their money back. Your neighbor's bank will work with them because they're in too deep to foreclose easily. Or imagine an earthquake swallows both houses. Your equity is at the bottom of that hole. Your neighbor's cash is safe in the bank. Who's better off? This is what we mean by safety, liquidity, and return. Once you put money into a house, it's no longer safe, no longer liquid, and has no rate of return. Look, whether you pay off your mortgage or not is ultimately your choice. But the math is clear. Paying cash for your house or rushing to pay it off early can be $1 million mistake over your lifetime. This is why strategy beats rate always. It's not about getting the lowest rate or shortest term. It's about what strategy creates the best outcome for your household blended interest rate and your overall financial picture. Most people are living by rules from the 1930s. We're in a different world now. The question isn't whether you can pay off your mortgage, it's whether you should. Bottom line, if what you thought to be true turned out to not be true, wouldn't you want to know right away? Let's look at your complete financial picture and see where you really stand. Visit rsarlings.com/keysteps, rsarlings.com/keysteps to get your financial house in order and see how strategic debt management could work for your family. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com.